Welcome to another episode of the Scaling Podcast. I'm your host, Aaron Harper, and today's guest is Kelcey Lehrich. He has built a e-commerce holding company. What is that? What is an e-commerce holding company? It is a holding company of brands that are direct-to-consumer brands. He talks about going from starting with $1 million acquisition to now building a $60 million company.
In any portfolio, you're going to have winners that run away.
Oh, sure. Yeah.
And that the best decision is often to continue to capital allocate into that winner to push it farther forward, as opposed to trying to duplicate it, whether that's feeding the small ones or copying it, to use your analogy in franchising. So like I look at it as like the smallest business or least attractive in the portfolio is perpetually for sale from us. And all I want to do is take that and reinvest it back into the biggest, best one. And just kind of recycle up the ladder as we go.
He talks about the challenges in scaling. He talks about growing through acquisition. He talks about the troubles he's had with certain employees and how he's gone through that. And we have a wonderful conversation that I know you're going to get a lot out of. Make sure to listen till the end and enjoy the episode. Kelcey, welcome to the show, man.
Thanks for having me.
So this is a fun one for me. It's making friends is like in your late 30s / early 40s is like kind of hard. And what I love is that we've developed this friendship around the like, hey, we like to ski and snowboard and like build businesses and like, and there's this like Twitter thing where we can also be friends on Twitter. And we went skiing earlier this year, which was great.
Couple times,
yeah, we did. So thanks for inviting me. So today I want to get into like, you've built this great kind of like e-commerce platform kind of Holdco model, which, is really unique. I know, Bill's done something similar in the past, like there's kind of a handful of guys. And so I really want to dig deep into that. But how did you get started in e-commerce and like, what attracted you to it and kind of why? Yeah, like give me a little bit of, let's start there.
For sure. Our first e-commerce business purchase was in early 2017. So I have a business partner. His name's Justin. We've been working together on a 50-50 basis for a really long time. I get to do fun stuff like go on podcasts and go skiing. He like does work. That's kind of the basis of the relationship. I've always been ideas, strategy, growth, marketing, acquisitions, deals, negotiating, whatever it might be. And he's always been like operations, team, execution, run the P&L. And he's good in his area, and I try to be good in mine. But
you need both. Like you need
do.
Both. You really need both. Yeah.
I think it was a understood feature of the book The Outsiders from Will Thorndike. Everybody thought it was a capital allocation book, and it's really a partnership book. Like there's always a CEO and a COO. There's one guy up front, one guy behind the scenes, front of house, back of house. Everyone just describe it. There's usually two. Disney had ideas, but like Roy had to run the place, kind of thing.
Yeah.
At any rate, to answer your question, we bought the first e-commerce business in 2017. We had previously had a group of small, non-scaled offline service businesses, a couple, 2, 3, 4 of them. We could pay ourselves. We had no employees or team, laptops, cell phones, coffee shop kind of lifestyle. We were scrapping it together. We sold one of them for $100,000. We got an $800,000 SBA loan, $100,000 of our cash, $100,000 seller note, bought $1 million business to kind of launch what is today 365 Holdings.
And you do 60 roughly in 60 million roughly?
We should do 60 this year. Last year was about 45 on top line. We'll see some big growth this year. Yeah.
Wow.
That business, when we bought it, was doing 2 of revenue when we acquired it.
Okay. And what business was that?
That's our old school survival business. I liked that we paid a relatively low multiple. I liked that it had a team, and that we thought that we could operate the business. Those are really the 3 things. Good value, people there that could do something, and even if things didn't work out with those people, we were pretty comfortable. We could figure out how to run the company. Many of them stayed with us for a while. We had a good long run with that group, but that business became kind of the foundation of what 365 is today.
And how many brands are, if you could run me through, how many brands are in now? And like, that was the first one kind of. Yeah.
So there's 6 today, depending how you want to count, because there's some little Kelcey ideas along the way that maybe we don't need to count, but the number's probably north of 20 between start, buy, sell, close. 20. There's probably at least a dozen that are material, but there's also some small little ones along the way of me trying things over time. So,
okay, so you have 6 currently, but you and Justin have started 20 together in your lives.
Predominantly through acquisition. There's 1 or 2 little greenfields in there, but 18 or 19 of those 20 was paying somebody to buy their business. Yeah.
And how do you know Justin, and how did you guys decide to partner?
If you go back in time, he was a financial advisor, and I was a business broker here in town, like locally selling brick and mortar businesses. We met at a networking event. The networking event was sponsored by an organization that hosts structured networking groups. So imagine you go to a local coffee shop, maybe a Rolling Suds franchisee, and you meet with the realtor and the banker and the accountant, and you have trade leads. If you're familiar with that business model.
Okay, like a BNI.
Exactly. This business was a competitor to BNI, and it's the first business Justin and I bought together.
Oh, interesting.
So we met at this event, and like within 90 days, we're like, well, this just makes sense. It'd be better to do this as a team.
Okay.
So yeah, we met not in college, not in high school. We weren't buddies from back in the day or whatever. We got a really great personal relationship, but we're really business partners first and foremost. I've been to his kids' birthdays. We're integrated into each other's lives, but we're also primarily in business together.
Before you guys launched 365, did you guys have kind of a thesis? After that first one, have you evolved into a thesis about it, or?
The original thesis is if 1 is good, 2 is better. Okay. And if 2 is better, then 3 is going to be great. I'm joking, but I'm also kind of serious. So there was a trend in the 2018 to 2020 boom of e-commerce where there's a business model known as aggregation. The biggest example there would be Thrasio. There were others, Perch and Boosted, and many, many people that raised venture capital dollars to try to aggregate consumer products businesses that sell primarily online and maybe even primarily on Amazon.com. That was a thesis around distribution as a business model. That thesis has broadly been disproven and largely is not active in the marketplace today. Our thesis had always been something that was influenced kind of in my brain around the notion of a micro brand. And so the notion that there's always big brands. You're wearing an Under Armour co-branded t-shirt. Everybody knows who Under Armour is. You and I, as guys in their late 30s, early 40s, get a lot of ads from brands that want to sell you the best men's whatever. Dress shirt, travel pants, sneakers, insert your category, right? And I really believed that in every consumer spending category, there'd be a long tail of brands, so a recognizable brand name, logo, identity, that had some meaning or purpose beyond the category. It was not a commodity. And there'd be $1 million, $5 million, $10, $20 million brands that had a consumer affinity, had good, durable profitability, had a niche in the market, and there would just be lots of them thanks to the internet. So you go back in time, if you wanted to be a brand, you had to be in Sears or Kmart or Nordstrom or Walmart or whatever. The internet kind of unlocks distribution to allow a large number of small branded companies to go to market with unique value propositions. You could be vegan peanut butter. You could be heirloom grade leather dog collars. You can be anything you want, right, on the internet. And I just thought there'd be a lot of these. And there'd be some synergies of understanding the go-to-market strategies. You got to be on Facebook ads, you got to be on Amazon, Shopify. But they really were separate businesses, and there'd just be a lot of them. And that was really the real genesis, was like find these long-tail brands that would have some niche staying power thanks to the internet, and were enabled thanks to the internet. It definitely has evolved, but that was kind of our angle on it back in the day. Was always small brands with a really enduring following that could or should need to exist in the world because of their connection to their customers. And
the aggregation model that was disproven, can you say a little bit more, like, what was the exact thesis? Like aggregating them, meaning combining them versus keeping them separate? And like, how was it disproven?
It was disproven by all of them going out of business, and nobody subsequently funding them. So like there was a big venture capital boom to finance that, and like it just isn't happening anymore. So that's how it's been disproven. Thrasio infamously filed bankruptcy. Some of the others restructured or whatever.
Got it.
The thesis, I think, is if I could explain what they were trying to sell to Wall Street and capital providers as the ultimate buyer of those businesses, is that there was enough of a homogenous operation that you could, quote unquote, roll them up the way you could roll up HVAC or plumbing or dental offices or insert something else. The example I usually like to use is like Starbucks, not a franchise, but it's a chain, right? It's a homogenous experience where every one of them is the same. It's scaled. It benefits from brand power, systems. It's a real organization, right? That's Starbucks. If I gave you all the money in the world and you went to Nashville where you live or Cleveland where I live and you bought every independent coffee shop and you just owned them all commonly, but they were actually all different, you still wouldn't have Starbucks. You just have a bunch of little coffee shops all duct-taped together. It's essentially what the aggregators did. They never built anything of enduring scale because the businesses really are not aggregatable. In my portfolio today, we don't view them as a portfolio of one single conglomerate operating entity. We really view them as separate businesses. Aggregators are always selling the dream that you could put them all together in a blender and out comes this new, bigger, better thing that looks like Procter & Gamble maybe, and it just didn't work.
Yep. Okay, that makes sense. What's been your favorite business that you guys have grown together?
Favorite business? Like picking a favorite kid, man. Which one of your kids is your favorite?
It depends on the day.
See? Same answer.
It depends on the day.
Same answer.
All right, how about this? How about least favorite?
Oh, man. We can go back to favorite. Least favorite brings back some trauma. So what we really like, and there's a couple businesses we have that have these qualities. We really like a business where we own supply and demand. So supply meaning we want to own the supply chain, maybe even the factory, have proprietary products, control the manufacturing and distribution of the product. I don't want to just go to Alibaba, slap a label on something and import it. Anybody can do that. We want to really control supply. On the demand side, we really want to see a business that can have unique, durable, proprietary ways to create customers, create demand. Mm-hmm. Put those two things together, you get a really great consumer product business. I think we have a couple of those in the portfolio. So one of our favorites is a brand called Cuddle Clones. Mm-hmm. So imagine a life-size replica of your dog or cat that looks just like your dog or cat, made by hand in our factory overseas, and shipped to your door in as little as 2 to 3 weeks. You upload photos, and our factory hand makes an artisan quality replica of Fluffy or Scout or whoever your adorable little friend is, and we get it to your door. So we control that factory that makes that product. We ship it to you. We're making the ads. We're building the website that builds that experience, the backend database that enables it. It's a real business that stands on its own, where we have an end-to-end relationship from raw materials to shipping it to the customer's doorstep.
Yep. That's really interesting. Yeah, that makes that, and that's your biggest one in the portfolio.
It is today. Yeah.
Yep. I remember telling you when we were in Colorado that I used Petsy's, and it was like I might as well have like spit on your children.
It's like, cool, buddy. I bought a pressure washer and did it myself. Like we're all equal here. It's cool.
Yeah, you bought another franchise that does power washing, and you got friends running it. Yeah,
that's
right. Okay. And then one thing that I admire about you is the kind of like emphasis on community, YPO, kind of being involved in your community in Cleveland. Talk to me about why that's important to you.
I think that entrepreneurship can get lonely for a lot of reasons. And I've always been looking for relationships and connections, whether it's a guy's trip to go skiing where you and I spend some time together, or an event like Holdco conference that I started with John Wilson and subsequently I've exited, but they're doing a great job with, to just friend groups here locally, whether that's a church or other entrepreneurs, whatever it might be. I think humans were made for connection, and it's easy that like we have Zoom and we're using Riverside, but like you're 500 miles away, we have this great audio, hundreds or maybe thousands of people will listen to this. I could text you tomorrow, but like we're not always going to spend face-to-face time together necessarily unless we make it happen. And so I think the intentionality of building relationships, of investing time with people that have similar problems, similar passions, maybe different worldviews, maybe similar worldviews, but you can just build a relationship with, just makes life a lot more enjoyable and meaningful. Comparing notes about the differences between pressure washing and putting stuffed animal replica ads on Facebook makes for good conversations, man. There's nothing else I'd rather do, particularly if we're pointing downhill in Colorado. But it makes the journey a lot more fun to share it.
Yeah, and you've been in YPO for how long now?
This will be my third year. Joined the board last year locally.
Oh, cool. Yeah, I've looked into it a little bit. I think maybe 2027 or might be the time, but I think that's where I want to end up.
That organization particularly has a really good reputation of some of the kind of best entrepreneurs and business leaders in a given region. The criteria to join are a little stringent. You got to have a pretty successful organization to join, but it's a really powerful network to get into for sure.
Yeah. Okay, and then with your Holdco currently, what's like the plan? I mean, actually, let me back up. How did you go from 45 million to 60 million? Was it through acquisition or like what? That's a big jump in a 12-month.
Yeah, that is the acquisition of one business and the growth of another. So our two largest assets this year, one of which we've already talked about, they're both just seeing significant year-over-year growth. Yep. We've been mostly doing in the last 3 years what I would call special situations, turnarounds, buying assets that could file bankruptcy, working with lenders to do workouts to get control of a business that's failing, special business acquisitions when things are not normal. And in those situations, we can usually look at a business that had, historically, a really good set of revenue and maybe even really good contribution margin in their P&L, but now the business is broken, either in the P&L or the balance sheet or both. And because we have a lot of experience in a lot of different e-commerce businesses, we can kind of quickly make heads or tails of those opportunities and then pursue and operate them. And what will often happen is in the first year of a turnaround, you might be doing a fraction of the revenue that they did historically, and maybe even your entry cost of debt assumption or equity purchase price or whatever might be pretty modest. But with all that history there, and with a team that knows how to execute, we can usually pretty quickly ramp up and grow those businesses. So the projection of this year's top line is the combination of two of these special situations really hitting their stride out of that kind of J-curve turnaround phase and into like a really good growth year.
That's awesome. So can you talk about the other one that you bought? And
yeah, the other one is
you bought it, now where it is now?
Yeah, it's a jewelry brand called Brian Anthony's. Okay. Founders just kind of got over their skis in terms of their balance sheet with obligations to lenders and creditors. We were able to put together a package to kind of save that brand from going under. A lot of supply chain challenges there with making a lot of jewelry SKUs overseas. Bought it right before kind of tariff mania. It's been an interesting thing to navigate.
Yeah, I want to talk to you about that. Yeah.
Yeah, we'll talk about that. That business had been very, very strong, and we were able to get an attractive entry into it, and we'll see good growth this year.
Cool. Yeah, so let's talk about some of the biggest challenges. Obviously, tariffs have a big effect on your business relative to, like, let's say my business, right? Like, I mean, we buy equipment and stuff like that, but it's more service-based versus product. So how has that impacted your business depending on how Trump's feeling on a Tuesday at 9 a.m. and what he tweets? You know, you don't know what's happening.
So most of these answers are me parroting my business partner who's not here because this is more of his wheelhouse than mine. But we're aligned in the methodology and kind of philosophy, which is it's very obvious there's a strategic U.S.-China thing. And all we want to do is not get caught in the middle of it. If I was NVIDIA making chips or AI or drones, it'd be a whole different thing. But we're just in consumer products. And if I'm honest, they're going to get made there for a long time. We don't have the factories to make that kind of stuff here. It is what it is. What we want to do is have a supply chain that's not going to get caught sideways in a trade war. So step number one is diversify out of China anything and everything that we can. I don't know what tariffs will be tomorrow, but if we can get to Vietnam or Peru or Indonesia or India, someplace that's not China, with a primary supplier, a backup, a tertiary, just diversifying the supply chain is kind of step number one. Practically speaking, what we've done is we've gotten the majority of our products no longer primarily made in China. They might be partially made in China, they might still have a backup supplier in China, but by and large, we've just moved our supply chain to other jurisdictions.
And you've done that basically this year. I mean, that's got to be because
I've not done any of it. Our illustrious supply chain, our supply chain team has done an excellent job. Whether that was flying to China, flying to California, visiting Mexico, like a lot of work has gone into this, a lot of research. And there's a supply chain team that supports all of that, but Justin's kind of where it blows up to. Like it was playing defense as a business for the first 4, 5, 6 months of the year, derailed a lot of strategic growth, which is unfortunate, but I'd rather have that problem solved than some businesses that were like, I don't know if we're going to make it. It was definitely a headwind for us. It was not going to be a kill the business, terrible, insurmountable challenge. It was going to be a problem. And we've managed to mitigate it to being a very small problem.
That's great. That's a real impressive strategic turnaround given market conditions. So very cool. Okay, great. So you're scaling that business. What do you spend? I think you and I spend our times doing a lot of similar things, but what do you spend your time on in terms of growing the business?
Outside relationships, strategic growth, mergers and acquisitions. So outside relationships is anything legal, tax, compliance, outside CPAs, bankers, lenders, law firms, a lot of that. Events, networking, speaking, trade shows, conferences, podcasts, some of the more fun parts of my job, and then deal flow. So whether that's relationships with founders, investment bankers, brokers, private equity firms, venture capital firms, whoever might be a source of deal flow, looking at stuff that's publicly marketed and advertised for sale on listing websites or kind of brokers that email stuff out, talking with other peers in the acquisition space or capital stack about what they're seeing in the marketplace, and generally trying to be in and around transactions. In the last couple months, we've gotten pretty serious on a few. Haven't had any that closed, but I've been busy looking at all kinds of stuff to get in trouble with.
That's great. So you'll do 1 to 2. Is the goal kind of like 1 to 2-ish?
One every 9 months is like perfect, but it's never one every 9 months. It's always like 12 to 18, or it's every 6. And if it's every 6, the team's upset at me. If it's 12 to 18, I get bored. I complain about it. If I can stick the landing on 9 months, everybody'd be real happy. We're kind of actively trying to format our organization to make sure that we have the bandwidth to kind of somewhat at the drop of a hat pick up an acquisition, particularly if it's a deep value, special situation, or turnaround, and to be able to immediately go all in to saving that business and getting up and running, while trying to not interrupt our core operations in the portfolio. So we're about one organizational evolution away from being able to really, really do that easily. Right now, we do it with some friction to kind of drop everything and go work on the new baby. But that's kind of the goal, is to have the teams running the businesses and having kind of the SEAL team, if you will, ready to pounce on a new opportunity when needed.
That's what I was going to say. You've got your normal ops, and then you've got your special forces.
Correct.
So are you primarily focused on turnarounds? Is that kind of what? Is that just where you guys really see that you can add a tremendous amount of value and capture the most upside?
There is a good number of them that happen in the marketplace. From a pure financial spreadsheet exercise, use any measure you want: multiple invested capital, net present value, IRR, get all your fancy ROIC, like all your fancy investment banking calculators. They're the best deal. Like, you get the most squeeze, most juice for your squeeze, most opportunity, the most whatever. It's a deep value purchase. I think in today's environment, we have a hard time paying like a really high market price for a growth asset. I think for businesses that are really good growth asset businesses, there's probably other partners that would be a better financing source or operator for those brands. Whereas we've seen we've carved out a niche where it kind of fits my and Justin's risk tolerance, and it kind of fits the return profile that we like of being able to do a lot of value add very quickly. I don't know that we'll necessarily take the scaling women's fast fashion brand from X revenue to Y in 3 years. That may not be our thing. Making sure that Cuddle Clones with Brian Anthony's is here tomorrow, we can do that really well.
Yeah. What are you seeing kind of in the capital market space, either with your own acquisitions or like what are some trends that you're seeing in the kind of ETA Holdco space with you and your peers? Any
Ecom or broadly?
Broadly in the capital kind of like if you were to take like the Holdco folks at Holdco conference that we were at, like what are some trends that you're kind of seeing as you dig deeper into the space?
Yeah. I feel like everybody always says this, but it does feel like it just gets continually more competitive for good deals. So kind of your down the middle fairway SBA loan, kind of $4 or $5 million acquisition, or maybe you're like independent sponsor, $7, $8, $9 million acquisition. Those just seem to be more competitive all the time. I think we're going to keep saying that. It's going to keep being true. But it definitely feels that way. In Ecom, there's a lot of distress, a lot of just the tale of two cities, like a lot of really healthy, growing, great, profitable businesses, and a lot of like strung out, broken balance sheet, special situations, kind of like turnaround projects. So it's definitely interesting in Ecom land. In ETA broadly, though, I think the kind of enduring rate environment is interesting to see what that's done. I don't think it's cooled multiples quite the way people maybe wanted it to. We'll see what happens in kind of the macro Trump, Jay Powell, like the whole macro environment. I wouldn't mind a rate cut. It'd certainly be good for our balance sheet, but we'll see what happens.
And for those who might be listening to this thinking, oh, I want to build a $60 million Holdco. How did you raise capital? Did you raise capital? Like, how did you did one business finance the other one? Like, how did you get started?
The answer is kind of like by hook or by crook, if you will. So there is no paid-in capital from any outside party on the balance sheet. If you trace back, even like the little business that Justin and I sold for the $100,000 that financed the first like SBA purchase, that business has some roots that go back to like a purchase price that was like $10,000. So turning 10 to 100 is pretty good, but I'm proud of that. But when we bought that business for $10,000, I think we paid like $1,000 or $2,000 down, and seller financed like $8,000 to pay the $10,000. So we kind of turned like next to nothing into something along the way. So all that to say, I'm not like tooting my own horn, but like we've kind of built it. It's been a sweat equity thing, whether that's the team and their effort and hard work over the years, being with us on the journey, our risk tolerance, our spouse's support of a lot of late nights and long hours, some crazy harebrained decisions that frankly just paid off. But it goes back to 2017 for e-commerce, but it goes back to like 2012 for Kelcey and Justin as like entrepreneurs just trying to make their way in the world to a degree. I would say that if you were to look at my personality profile and any major assessment tool, I'm pegged all the way to the limit on risk tolerance, all gas, no brake, living in the future, very much goal oriented.
You and me both, yeah.
You as well. So like, to your question of like, hey, that must be nice. That sounds cool. It's cool for me because that's the way I'm wired. There's a lot of people that may not have enjoyed the journey. In 2023, we had a brush with near oblivion. We almost had a real existential crisis financially that could have ruined everything. All the businesses, Justin and Kelcey personally, all the guarantees we had. Like we had a real kind of close call financially. We could talk about that. It's a whole own topic, but it's not always sunshine and rainbows. So
yeah, I mean, I've shared this. Like I mean, last year we had a complete shift in our model. Like it literally became, hey, we're gonna charge the money up front and go pay for the marketing, to like overnight, no, like we have vendors and you're gonna pay the vendors and you get to choose. And like that shift happened overnight, and it was like, this is what we're doing now. And if we continued going the other direction, we just wouldn't have a brand. Like, and so I totally get. But I mean, whatever you're comfortable sharing about that, kind of 2023 experience. I'm sure it would be helpful for anyone who's listening.
I'll give you the short version without the nitty-gritty details. Sure. But we had a head of finance that was apparently more interested in trying to keep his job than telling the truth. So he caused some problems that resulted in myself and Justin finding out that we had a lot more debt than we thought we had and not as much cash as we thought we had. It's called a liquidity crunch when you owe a lot of money out and have no cash to pay your bills with. And we learned that in a kind of very unpleasant set of circumstances. So within about a span of 2 weeks, we discovered this pile of problems. I had to let go of about half the team, which is really painful. A lot of there's good people kind of caught in a situation where we as founders are trying to make good decisions and working with bad information. We went through a workout process with a number of lenders where we had to cut deals and didn't pay ourselves for several months and kind of tried to thread the needle on who we were paying how much to when, and went to like a daily cash flow model once we dismissed the head of finance and took that over for ourselves to operate. Through a lot of great support from our team, from some lenders that were happy to work with us, and from some just really good fortunes in how the business has performed. We were able to work through that and exit all of those short-term debts with kind of favorable terms. And forever will be like better operators thanks to that. But it was an incredibly painful process of literally not knowing, am I going to wake up to a lawsuit tomorrow to put this out of business? Am I going to be found in bankruptcy or not? Thankfully, lived to tell the tale. But yeah, it was a very tenuous, life-changing experience.
Yeah, I think that's the part of business ownership that people don't see, and whether it's through like internet influencers or like a variety of different things, like people don't see the like I'm at home sitting next to my wife and I'm not sure that we're going to be able to do anything because X, Y, and Z has happened in the business. Like that level of risk,
you're on your laptop canceling Amazon Subscribe and Save stuff because you don't want it to hit next week. And she's like, what are you doing? Like, oh, honey, everything's fine. Don't worry about it. Can you cook dinner tonight? I don't want to order out.
And can it be butter noodles also?
Also, I'm thinking that car, we should just downsize. We should be a good day for a lower payment. Those who have been through it can share some commiseration on what that's like. For your audience that might be listening to this, it's like entrepreneurially inclined or interested. Like if you have the risk tolerance, just know it's not a matter of if, it's a matter of when and how bad. Like somebody will steal from you, you'll lose some money in the deal. Like I've lost more money, more time. Like I stopped counting because it's just not important. Like we're blessed and we're doing really well. But like if I was to count on my eggs before they hatch, man, I'd be like to the moon wealthy. And it's just not the case. Like a lot of stuff goes wrong all the time. Ironically, like about the time this happened, a buddy of mine called me out of the blue like a day into this, and he's like, "Oh, I had this prize like $60,000." I'm like, "Dude, I got a much bigger number than that, and I don't have time. I love you, I want to help you, but like I can't do it right now, and my number's got like some zeros on it, so I gotta go." I feel bad for your $60,000, but this is a different level. Yeah, like, if you're listening to this, like it will happen to you, whether you're in Rolling Suds and have like a great team, like just things will happen. It's just not easy.
Yeah. What was that like? I mean, I don't know what the dynamic is at your house when something like that happens, but is it like you bring the whole family in on what's going on? Is it like, hey, I'm going to handle this, and then like, don't worry, we'll figure it out? Like, what's the dynamic? Because I know how it is in my house. I'm happy to share that. But how is it at yours?
I'll go first, and then you can share. My wife's a stay-at-home wife. Our relationship is grounded first and foremost in our faith, but also just in our relationship with each other. And like the deal is always like, I'm going to be the breadwinner. You're going to take care of home. Like you're going to raise the kids, and like I help. I'm a present father, but like her job is to not work, and my job is to go to work. And so I think she knew that day something was up when I was like in my office till midnight, which very rarely happens anymore. And something was just kind of wrong. When I finally sort of tried to explain it, I'm not sure whether or not she actually understood all the gymnastics or problems. It was confusing for people that know the details. It was very confusing for someone whose husband is supposed to be a successful business guy, and she's like, "Oh, like, can I buy groceries next week? Is everything okay? Just tell me everything's okay." And her outcome of all that was like, oh, you'll fix it. It'll be fine. Like, I got you. I'm good over here. Me and the kids are fine. Like, just tell me how much to spend or not spend. Like, I'll take care of the house. And you go back to work. If you need to put in more hours, if you need to do whatever you got to do, I know you'll solve it. You got this, babe. Like a little pat on the back and get back to work, kind of thing. So that was both isolating and endearing to that perspective. Had a big impact on my faith and really humbled me. Just kind of seeing we're only in this for a short time and it all kind of is not material and you can't take it with you and it's just not that important in the grand scheme and it's easy to get your identity or your ego tied up in your business or the revenue number or you're speaking at this place or you have this many employees or you drive this car. There's so much that gets caught up in that. It's so easy to fall into that temptation. And I should re-ground myself in the truth of who I am. So that was painful, but also a really necessary part of the journey, just to be honest. Yeah, to answer the question, she just was you'll figure it out. And you know what? If life changes, it does. We'll be okay. There are more important things in life than how many employees work for you or which business you're in. We'll figure it out.
So we have a very similar setup at our house. My wife stays at home. She got her doctorate, but it was all based on research around children. She got her doctorate in basically child development, child psychology, but it was on the research side. And when we first started dating, I'm all right, so you just finished 10 years of school. Someone gives you a 6-figure salary. You can do anything you want to do. What is it? And she's like, do I have to work? And I was like, tell me more. And she goes, I just have always wanted to be a mom. And so from early on in our dating, it was okay, well, this is what we're going to do. I'm going to be the one that makes the money and you're going to be the one that makes sure that our house stays together. But there have been times since launching Suds where it's I'm I don't know if this is going to work. There's been multiple times where I'm what is going on? Employees coming to the quarterly planning meeting, reporting numbers for performance for whatever. And then finding out after 2 or 3 quarterly planning meetings that those numbers were literally made up. And then having to make changes quickly around, it's just crazy. And so from my perspective, at my house, I'm I try to explain something to her, and then I just realize this isn't even helpful. This is my lane, and she's going to say the same thing that your wife's going to say. Is oh, I love you no matter what. It's fine. You'll figure it out. And then it's she's who do you need to call? Do you need to call Kelcey? Do you need to call your buddy Andrew? Do you need to talk through it? But it almost isn't helpful, bringing it too far to the forefront, at least in my house.
Yeah. I think that's actually pretty normal in a lot of high-achieving entrepreneur, head of household family dynamics. Men like us attract women like that, so they trust us to go do this thing. It's not a chauvinist comment or a thing on society. It's a fact. I know a lot of people that's the situation of that's the basis of their relationship. And to be honest, if you didn't have Suds or I didn't have e-commerce, our wives would still love us. Yeah.
Yeah. She just doesn't care about she just wants this, whatever option is going to give her the most amount of time with me and with the kids. That's what she wants. And for me, you talked about that experience in 2023 being kind of grounding for you. In the last, I've had a complete major transformation in just the similar, because just in the last 3 months, we just welcomed our third kid, Emmett. He's I think he'll be 7 weeks on Thursday. So he's very new, but we were, the business has been growing insanely. We're at 320 units now. And basically Sarah went into the hospital, because she went into preterm labor at 31 weeks. And I know you and I were texting about it. I appreciate you checking in on us. And faith is really big in my life. Just of who, where I'm going and what my purpose is. And in that moment, I'm living in I'm okay, like whatever, like nothing else matters other than this.
Yeah.
And I'm living in the hospital. They reverse the labor, and like baby's fine. She's fine. Baby's fine. Like he actually made it to full term, but like she was on bed rest for 8 weeks. And during that time, I was like, okay, I have to take a full step back from the business because literally, like, I can't give my 100% focus to my family, bringing my kids to the hospital 5 to 6 days a week, sleeping there, driving back and forth, 25-minute drive, depending on the time of day. And I had to, like, completely reset. And during that time, I was like, I'm not my business. And in fact, if I am my business isn't really worth anything, and it doesn't have a tremendous amount of value. And like this is sucking away at my ability to be present. And it was during that time that I read some books, I did some writing, and I was just like, I put everything down on paper, everything that I am outside the business, like my marriage, my family values, like put it all down on paper. And then I was like, yep, it's time to get a CEO for the company. Like I need my Justin, you know what I mean? Like I need someone who's going to come in, operate this thing, create value, and let me go do what I'm good at, which is like getting on here and talking to you about life, you know?
Yep. Yeah, for sure.
So, yeah, it's just wild. Like I tell people that starting a business has been the most insane personal development course that I've ever taken. Like ever. And I'm a much stronger person because of it.
Yeah.
Because you have to be. Like, and I don't know if because you guys went from in 2017 $1 million in revenue to now 60 million in revenue. Pretty much.
Yeah,
roughly.
Two
Yeah, two to 60.
Some ups and downs along the way. Hung out about 25 for a while.
Yeah. So, I mean, like, if you think about like that kind of hockey stick growth in your business, there's only so many people who can also personally or professionally grow at that same rate, right? And if the business is growing and you're hiring people, but they're also not growing at that same rate, whether it's into roles or whether it's into new responsibilities, like you as an entrepreneur still have to grow at that rate. Like you're evolving really fast, or at least, that was my experience. But not every team member can. And the business needs different people at different stages of growth.
I remember getting frustrated with something internally, and Justin telling me in the conversation, he and I have this way we kind of hash through things that works well for us. And he's like, I don't think you understand how much time and effort and energy you can spend growing while everybody else is over here just like doing the day-to-day. And like you forget what the average day-to-day individual contributor might be going through, and you're living so far in the future trying to figure out what's next, the next deal, the next marketing thing, the next product, whatever it is. But you take for granted that like the cogs in the wheel, not to be dismissive of like the individual roles, but like there's a machine with cogs that need to move forward every day. They don't get the privilege of like investing, and like your job is to go invest so that you can make the next thing so that they can grow, but they're never going to be at the same speed or pace. Like they're not you, and they don't want to be, and you shouldn't want them to be, and like we're all who we need to be, and that's okay. Like if they were an entrepreneur, they wouldn't work here, and if you're an employee, you wouldn't be the boss. Like there's a reason why there's distinct personalities and roles. That's really easy for an Aaron or a Kelcey type to just be like way faster ahead in some of that, and it is. I fully believe like success in business is you said it best, like absolutely a ton of personal development work. It just is.
Yeah, and for me, like I'm really focused right now. I'm like, okay, we've hired this CEO. He's amazing. I did like 4 personality assessments on him. He's been in franchising for 22 years, working in some of the largest restoration companies, franchises in the world, ServPro, Restoration One, PuraClean. And so like, okay, now like my definition of success for so long has been how big my company is, or like whatever, like you have to attach yourself to the business in order to get it to this. And now I'm like, okay, like I receive like 7 emails a day. I'm like, okay. And he comes to me, you'll like this. He comes to me with this idea. He's like, Aaron, what if you just did something crazy and like document the whole thing? And like, cause we do a lot of content creation, as you know, and I'm like trying to figure out content in this like new world of like AI and like AI slop and just like what it looks like for me, what I want to make. And he's like, let me just throw it out there. What if you just like went and climbed Mount Everest and you document the whole thing and you're wearing Suds gear the whole time and like just create the whole thing? And so I look into Everest on ChatGPT for like 2 minutes and I'm like, nope, not doing that.
Hard pass.
Like hard pass. But then I was like, what could I do? And I've done
Kilimanjaro's not bad.
I've heard it. Kilimanjaro's not bad, but I'm also like not a mountaineer. But what I am is I have done triathlons in the past, sprint triathlons, and I'm like, what if I just like
Ironman?
What if I just did an Ironman?
Yeah.
And so I called him, and he's like, yes, and he's like, I can ride on that because like you're gonna be wearing Suds gear the whole time, and like you parallel it with like how hard it is to start a business. You're a chairman of the board, but you're not like on an island somewhere. So franchisees are seeing you actively engaged in growing and personal development. And like, I think what's going to happen in doing this is like, yeah, we'll have some good content, but I'm also going to be like a stronger human and therefore we'll be able to be a better owner of the business. So
I love that. My version of that is very different. The version of like, your role has to change. I no longer have an office at the office.
Wow.
I need to like hot desk it somewhere because I don't have a space anymore. I gave it up to the new CFO. Yeah.
Wow. How does that feel?
It's weird because like people, like I walk in and kind of laugh like, oh, hey, where are you going to sit today? You want to come sit by us? So it's like, well, I'm only here for a little bit because I have meetings later. It's good for jokes. It's also kind of real. It's pretty fun.
Well, I mean that I think that just is a testament of you building a great business. Honestly, like very few people. My brother-in-law is a business owner, and he's got like 4 different businesses, and has built this great business and built this great entity. But I mean, it took him a really long time to get to the point where him and his wife, her co-business owners, aren't involved in the business. And that's not a slight to like building any business to multiple millions of dollars is like. You're already in the top like 0.01 or whatever percent. But like if you can build a business to the point where like you're truly irrelevant and so the decisions you do make like really move the needle in a really big way, I just think that's ultimately the dream. And if you build yourself out of having an office, like great.
It feels, you're right. And I had some discomfort with the fact that I got to get more of that flexibility or freedom earlier than Justin did in our relationship. Now Justin's been in Florida for a second straight week on vacation. He's on his boat today. Like, it's nice that that evolution is now like starting to pyramid through. And that's kind of the next goal for us is to keep the holding company activities very above or disparate from the actual day-to-day operations, so that the general managers or brand presidents or whoever's operating this company's day-to-day is truly operating them. And as the holding company level, we're just doing the strategic work that we need to do oversight. And that's really been one of the more fulfilling things to see that slowly inch forward year over year and how that shows up every day.
That's cool. Is he excited about that?
Yeah. I thought for a while to like drag him out of the operations up to Holdco level. I'm like, I need you to come with me. I think he's coming along on it. So yeah,
that's good. Cool. Yeah, my business partners, they started the original Suds 35 years ago, and Brian Senior's son was like, I'm having so much fun on the franchisor side. I'm going to leave my dad's business. Will you have me on your leadership team on the franchisor side? And I was like, yes, please. Like, can you start yesterday? And that was like November of 23. And so him and I have really been, and I think that if anyone decides to franchise their business, like there needs to be the person who understands franchising and then the person who understands whatever the widget is. Very similar to like those are two different businesses and like they have to interact really, like they have to like talk to each other really well. But having him come on the leadership team has been really, really important. But what's happened is like both him and I were at a point in time working, 18 hours a day, mornings, nights. I was doing sales for a long time. But now he is predominantly focused on national accounts. And he's not being pulled into the day-to-day. And he's like, Aaron, I just get to talk to like nationwide property managers about like winning jobs for franchise owners. And like, he's like working a normal like shift, he's not 18 hours. It's like 8. And like, he has a baby. And like, it's been cool for us to both like come out of the other end of that.
That's awesome.
Yeah. Okay, cool. So talk to me a little bit about, I always like to talk to people who are big on content, like as to like, when did that become part of your like focus? Why? And like, how has that evolved?
That's an interesting question. So, I don't think it's necessarily a big part of my focus. I think I'm open to invitations when somebody makes one that I think is worthwhile, like yourself. I've probably been on, 20, 30, 40 podcasts. I'd have to Google it. I'm not sure. I do think that the compounding of awareness, relationship, brand has like a long tail that's hard to measure. I think is helpful. It forces me to clarify my own thoughts in a lot of ways. I will say something different to you this week than I said to somebody a month ago. And it actually helps me talk through things, because if you weren't asking me that question, I wouldn't need to articulate that answer necessarily. So it's a helpful kind of problem solving thing. There are definitely people who can draw a straight line between media activity, tweeting, podcasts, whatever, and some KPI in their business. Leads, preferably revenue, whatever it is. I think we have a much more fuzzy line between activity and results. I enjoy doing it. I'm happy to have a conversation. Hopefully it's helpful to people that listen in. I do feel like I consume a lot of content, and so there's some part of me that wants to share whatever I think my best idea is, not because I think I'm special, but in the hopes that whatever I've learned will in some way impact somebody for the better. I've listened to hours and hours and hours of audiobooks and podcasts and read blogs and been on newsletters for years. And whatever successes I enjoy, whatever good decisions I make, is probably the compounding benefit of like consuming a lot of people's stuff. So like earlier we were talking about the micro brand thesis. That came from like 3 or 4 people that kind of put in a blender and put together. And like that shaped the building of our holding company in a lot of ways. Mm-hmm. And so whatever my version of that is, if I can answer a question or share an insight or a story or lesson learned, I think what I'm really hoping is that I'm kind of passing it on, paying it forward to a degree. If somebody hears this and has a distressed e-commerce business and we can buy it, I'm happy to do that. And if it's just a good conversation and somebody listens to this, is encouraged, and maybe makes the leap into entrepreneurship with Rolling Suds, or understands what they're signing up for and has a good conversation with their spouse about risk tolerance, I'd like to think that's helpful to them.
Yeah. I look at content. I was very against it at the beginning because I think I thought what a lot of people think, which is, oh, this is going to be like like it's all about you, and like I got to be fake online, or like whatever. You see people that like wink at the camera and you're like, wait, am I a character or am I a person? And so like I didn't do it for a while. And then like at the end of 2023, I was like, wait, a lot of our revenue this year has come from Twitter.
Yeah.
Maybe there's something here. I had like 200 followers or something. I hadn't tweeted since like 2016 when I tweeted about the election. I was like, I should probably delete this. But it was like, wait, what if I just like put exactly my thoughts out and we'll see how that goes. And it ended up going well. And then I developed an interest in it, which I didn't have an interest in at the beginning. It was like something I was like, oh, I think that this will impact my business. But it has become this compounding asset. We found team members from it. I've developed great relationships like with you and other people from it. I've become more involved in this kind of like ETA Holdco community from it. And then, obviously we found great franchisees from it. And we actually did the stuff, we did the numbers last year, and like the franchisees who came from my content were generally more qualified and ended up purchasing slightly more territories on average than those who did not. And I was like, okay. So now we're doubling down. We've got this podcast. We're going to probably launch a newsletter here, which might end up just being like my training journal that I send out, my like Ironman training journal. But like, it's been fun. And I've realized like, this is actually a good, like when I look at like time invested to dollars earned, it's like really hard to replicate that with another effort towards the business. So, but you started writing stuff online, what, like 2018, 2019?
So like I definitely was,
you were early.
In and around like business Twitter pretty early, whether it was like the finance end, the ETA small business end, the Holdco end, marketing Twitter's a thing for like ecom people. I really enjoyed the heyday, like 19, 20, 21, 22. God bless Elon, but the algorithm's just not what it once was. I think the community feel is just different.
Yeah, it totally is.
So I like the heyday of like Twitter. Holdco conference that John and I launched was on the back of Twitter, which was pretty cool to gather people like that. And so I've always enjoyed that. I've done some long form writing, kind of public annual letters for 365. I paused them due to our little financial circumstances. I'll kind of have a catch-up letter here soon. Needed to be kind of in a quiet period for a little bit. And then I've done, any opportunity to talk on a podcast, particularly if I have maybe a unique take. Some people are very hyperbolic, particularly on like e-commerce and marketing. I try to have a healthy dose of humility of like most of my ideas are not that original. I'm just synthesizing others' ideas and my own experiences to come up with an angle. There are a few things where I've got maybe a diverging opinion that I like to jump up and down about, have a bit of a soapbox if I can. Happy to tell you one or two of those. If
Yeah.
But,
let's double click on that. I love soapbox opinions. Please.
Yeah. So like I've tried to do most of those. Like my current favorite one that just rubs people the wrong way is like there is no such thing as an e-commerce business.
Okay.
It's a made up thing. There's also no such thing as a franchise business. Like you guys are a power washing company. You happen to go to market in the method of a franchising business model, but you're not a franchise. You are a power washing company. Panera is not a franchise. They're a restaurant company with sandwiches, right? There's no e-commerce companies. There is companies that sell men's shirt that have a website. There are companies that sell XYZ that happen to use Amazon or Facebook or whatever. And it's kind of my soapbox of like, I think it's a bit of a disservice, in my opinion, to lump quote unquote all of e-commerce together. It's how you get the aggregator ideas. Oh, they all have Shopify websites and they all have Google ads, so they must be the same thing. We can roll them up like a plumbing company. And I think that's fundamentally the wrong view of the business. And so there's other people that think, oh, like it's the same tech stack, the same problems, it's very homogenous. And I just really like having the other end of that perspective personally. I don't know that that's the spiciest of takes by any means, but it does ruffle a few feathers in the e-commerce land.
I mean, I see that in the franchise world. You see a lot of people launch one brand, they sell out the country, and then they're like, all right, cool, I'm going to add another brand, and we're going to put it under, you could call it a Holdco. I mean, it's essentially, it becomes one. You've got Neighborly, you've got Authority Brands, you've got, like, that's kind of the model for us. But what I've seen is in every single one of those like, I don't know, let's call it franchise Holdcos, you've got one like anchor, and it's like massive, and then you've got like other little ones, and the thesis is like, well, we've ran out of territories, we need to keep selling units to continue to get franchise fee income. So like we'll just launch a competing or a new complementary brand, a new concept. And I've talked to a lot of people who run those organizations, and I've asked every single one of them, what would have happened if instead of starting a new brand or, trying to kind of aggregate, so to speak, what if you just invested that capital into the original business instead? And every single one of them has been like, oh yeah, that's
way better idea.
What I would have done. Like, you'd have one $500 million company, system-wide sales company, instead of 140 million system-wide sales company with
fives and tens
and a bunch of 5 to 15s.
Yeah. The barbell effect in portfolios is pretty real. So we've seen it in our businesses of like, there's just some outliers. No matter what you do, every decision you make to get into a new business, the chart goes up and to the right. They're all great ideas, but the reality is just some of them are winners. It's portfolio outcome. I think it's the allure of growth makes us want to keep going to find the next thing. But it's really, really hard to escape that law of like, you're going to have some winners that just run away. It's interesting that happens in franchising too.
So would you so are you saying that in your portfolio, each of these businesses is essentially built to stand on its own? Do you have some shared services or what are you saying specifically about as it relates to your businesses and how they operate?
I'm saying that in any portfolio, you're going to have winners that run away.
Oh, sure. And
that the best decision is often to continue to capital allocate into that winner to push it farther forward, as opposed to trying to duplicate it, whether that's feeding the small ones or copying it, to use your analogy in franchising. So like I look at it as like the smallest business or least attractive in the portfolio is perpetually for sale from us. And all I want to do is take that and reinvest it back into the biggest, best one, and just kind of recycle up the ladder as we go. So we're trying to sell a small one right now. And people are like, well, why are you selling it? I'm like, well, it does $250,000 in sales. This one over here does that in like a couple days. Like we just can't there's no amount of money that I could put into it to make it grow into something slightly bigger. If I doubled it, it still wouldn't matter compared to taking the money it costs to double it and putting it over here. So my capital allocation is I have to put everything over here in this better bucket. This asset's fine. It may be a good one for you. I don't know. You got to decide that. It's just not where I can put anything. I have to strip money out of that asset and put it into my better one. To your point, though, it's like the tendency is like, well, we got to chase growth, so we need to go put money into everything and make everything get big. And not everything gets big. When you find a good business that grows, feed that thing. Yeah.
And I mean, I look at it, you really only need one $20 million company in your life to that's it. That's literally it. And so I've gone down that rabbit hole of let me look into Christmas lights or let me look into this. And it's like, dude, our franchisees are really new. They need a lot of help. We only launched this thing in our first franchisee launched in mid 2023. It's 320 units sounds great because I'm really proud of what we've done, but we're in early innings.
Let's get them all open and making money.
Yeah, we got a long way to go. Because franchisees are coming in as multi-unit owners.
Yeah.
So they buy their first truck, but if they buy 3 units, they're opening 3 trucks in the next 18 to 24 months at the latest. So it becomes all right, how do we allocate resources to help them do that in a faster and more efficient and effective way?
So why are you running a Ironman? Why aren't you out there opening trucks and doing behind the scenes and making the thing go? Let's turn the interview a little bit.
That's fine. That's
Eric can go get more PR for Suds and maybe sell a few more territories, but why didn't your CEO come to you and hey, let's go to Chicago and help them open number 2 that's struggling or something?
So that is
in Chicago. I don't know who you are.
Yeah. So that's a great question, and that is exactly what I'm having him do. So he's been in the role for a month now, and he's been home maybe 2 or 3 days of that month.
Nice. All right.
Literally, I'm go in the field and that's exactly what he said he wanted to do. He's I want to go on a listening tour. I want to go in the field. I want to ride in the trucks. I want to go sit with the crews. I want to understand the business and where the opportunities are. So we didn't even set major initiatives because I was just go on a fact-finding mission. You know a lot more than I do about how to scale a franchise system. So come back to me and we have our meeting on Friday and then they have their quarterly planning meeting next week. But ultimately let's do that. So he's now sat down with
this week. You have to go to work and have a meeting on Friday?
I do. Can you believe it? I have like, it's on Friday. I gotta work. It's like crazy. So I think like what I've really focused on in building the C-suite, because I started building the C-suite in April of last year, is like, how do I find leaders in each of those roles that know much more than I do, and then can come in and invest their time in helping grow Rolling Suds into like something really meaningful. And so when I hired him, like, it was like, okay, let's go out and create value for franchise owners. And like, how do we do that? And so like my skill set is not being in the truck and like figuring out how to optimize the operations of the truck. It's just not, and it drains my energy. And I'm not that good at it. I'm like, okay, so that means I need to find someone who really, really likes this and has done it with legacy brands before. And so that's what he's been doing the majority of the time that he's been in the role. He's in Nashville right now. We have a franchisee training happening. There's 8 franchise owners here training. He's here. Leadership is here. They're having their quarterly planning meeting next week. Like, he knows kind of where we need to go in the next 90 days to 6 months, and we're reviewing that on Friday. And I'm just basically going to hit the go button and let him ride.
Love it. Awesome.
Yeah, but people do ask me that, and I think it's just you to like. And you could probably, I would love to hear your take on this, but like, it's just a utilization of resources question, right? Like, my time and my skill set is a resource in the business, right?
Yep.
And it wouldn't make sense for me to have my CFO go do sales. Like, it just wouldn't. Like, it'd be a waste of resources. I'd be paying him a lot of money to go do franchise sales. And he'd be like, wait, I'm good at like spreadsheets and like, strategy around finance. So it's like, all right, well, how do I allocate resources properly to make the business as valuable as possible, so that franchise owners can have the highest likelihood of success and succeed? And he has gone in the field and he has done that. And then I've been able to say, okay, like, now I can focus on things that I enjoy doing: podcasting, going to Holdco conference, planning ski trips with you, strategy, green lighting. I manage the board. Like, you know what I mean? Like, that's just the stuff I like doing. But I don't know, like, how do you think about that with your business?
Similar to you. It's no longer a good idea for me to be in Facebook Ads Manager. I certainly was never very good at packing boxes or customer service tickets. It is somewhat conflicting when you get to that point in an organization where you're like, I don't feel guilty about it, but if you kind of remember what your purpose or value add is to the organization, focusing on that is definitely in everybody's best interest. And anytime I feel conflicted about that, I just try to get over myself and get back to doing things that impact the organization.
Yeah, I think that's the best way to look to think about it. And I think there is a time when you launch a business where you do everything.
For sure.
And I think that at a certain size, the business gets to the point where you don't do everything. Yeah. And then it gets to a certain size where you're like, this doesn't make sense for me to do like 95% of the things. And so what is the 5% of things that I'm going to be able to do annually that's going to move the needle? And if it's to say, hey, we're going to drop $700,000 into building a national accounts team for our franchisees in the next 18 months, and I just hit the go button on that, like, that's going to move the needle a lot more than like something that might like look better on paper where I'm like in a truck with a technician, which would be a cool like PR moment, but it's like not going to be the thing that like makes the business go from 30 million in system-wide sales to 85 million in system-wide sales.
There was a point where Justin and I definitely did or could have done literally every role in the organization. Now there are quite a few that neither one of us would know what to do on. Me more so than him. But I think it's really just a question of like your aspirations as a business owner. If you want to just do the thing, you don't have to grow to that level. I think it's a lot of work, and certainly it can be rewarding financially or from a career perspective of accomplishment. But not everybody has to do that just because like Kelcey and Aaron want to. I don't want to like send the wrong message that everybody has to go make that their aspiration in life. Like I sometimes wonder if friends that are content with a little less striving than maybe you or I suffer from might just have an easier go at things. We lost a deal today that I was like upset about. It put me in a bad mood for a while. I'm glad I didn't cancel this with you, but I'm like, am I going to show up for Aaron's podcast in a good mood or not? And now we're having a great time. But I was kind of down for a little bit, and I'm like, well, like, it's my one job. Like, I'm not going to win all of them. Got to get back to it. I could have let it like ruin everything, but like, it's a deal. We'll have other opportunities. Keep our head down and keep going. Take some notes, lessons learned, but we got to move on.
Yeah. What happened? What happened in the deal? Did someone outbid you, or like?
Yeah, I want to keep this a little vague for confidentiality, but in short, it was a multi-party negotiation to buy a company that was in distress, and I think in hindsight, didn't do a good enough job of gauging motivations and risk tolerance. I probably made some assumptions I shouldn't have. And then in the ultimate negotiation, when things got kind of played out, I was very surprised by the outcome. Really shouldn't be. Like, I'd like to think at a certain point in your career, if you're hitting your stride and things, you should be less surprised by outcomes. And so when I'm surprised by an outcome, what I try to do is figure out where did I make the wrong turn. And I kind of now know the 2-3 things where hindsight being 20/20, I would have done differently. Kelcey, 5 years ago, certainly would have no idea how to approach this, so I'm happy to even be in the conversation and take the swing. But a lot of lessons learned about multi-party negotiations and how to work through risk tolerance and somebody's second best negotiation option versus yours, and just how that plays out.
Yeah, that's how we acquired Suds. It was a multi-party. There was a lot of stakeholders. It was like, how are we going to do this? I did not have a playbook for it. And there's a lot of things that can go wrong in a deal. A lot.
Yeah.
We were fortunate in that we got a great deal together that everyone has been happy with and wanted to be motivated towards growing. But
I think your partners are going to do just fine in the long run. That's a good deal for everybody, right? You got a great business, they got a great business. Your board's going to be happy, your shareholders going to be happy. Congratulations, man! Like it's a home run.
Thank you, I appreciate it. Okay, so 5-year, 10-year plan for 365 Holdings. Like, what's your big, hairy, audacious goal?
I think at some point I want to clock a 9-figure revenue year, maybe just once, and then kind of like be done with that. That's just a personal point of pride.
Just to say
yeah, the ego kind of wants that.
Yeah.
Problem with the buy sell is like if you sell $20 million of revenue and you're pacing something, like it's kind of weird. So you take a step backwards, perhaps from a P&L vanity metric. Oh, my business is so big. Like if we sell 1 or 2 things this year, it's not going to be 60 anymore. It'll be some number less than 60. I'll have some cash to show for it. My balance sheet will be stronger. Like there'll be a good reason, but my revenue line looks smaller. So the multi-business thing makes that vanity metric different. But in the long run, I'd love to tick that just once. It'd be kind of fun. I think I want to just kind of be a machine for these special situation e-commerce businesses. I keep threatening to get into something else, maybe rolling up third market franchises that do power washing would be a good business model, perhaps. But like, I think we're gonna be in e-commerce for a while. Certainly, Justin and I will look for other opportunities that might make sense. But we're gonna be focused on finding great e-commerce deals, as long as we're the best owner for them, operating them with a team, and when the opportunity presents itself that we're no longer the best owner, happy to see it onto a better home. But I want to do that for a while, and if we can find the 100 somewhere along the way, that'd be pretty cool.
So that's what, maybe one acquisition a year for another 6 years, maybe could get you there, depending on the size of the
acquisition. Stuff that we tend to look at is like 8-figure stuff, 10 to 20 million-ish. And so we need 5 that are doing 20 million, or we need 4 that are doing 25 to whatever. So we're gonna look to exit a couple things over the next couple of years, and kind of that bottom half of the portfolio will turn into cash. to go pursue some bigger opportunities. But like, if I just went and looked at the 2 things I swung and missed on, 3 things, 3 swings and missed in the last 6 months, well over $100 million of revenue, just didn't make the deals work.
That just flew out the door.
Yeah, all for different reasons, right? But
sure.
Like, we will get at bats at good companies to own and operate. Making good deals, knowing which ones to pass on is certainly important. Overpaying for something just to hit a vanity metric is like dumb. I don't want to be guilty of that. That's a terrible idea. So being smart about it is important.
Yep. Any final parting thoughts for anyone who wants to start a business? What maybe they should think about, kind of anything, any wisdom that you can leave?
I do think that some of the things we talked about earlier about knowing yourself, personality assessments, risk tolerance, it's really obvious now that I should be an entrepreneur, and you too. I don't know that I understood that at 22, 23, 24. I never had a job. I never had like a W-2 salary paycheck. I've always been doing something entrepreneurial, but like nobody sat me down and told me that. I do think that like if I was like the high school entrepreneurship guest lecturer for a day or whatever, like I'd tell everybody like, if you think this is you, I would go verify that. Like, just because it seems sexy and you watch like the Social Network movie and entrepreneurship's cool and you can get into Y Combinator and do a startup and raise money, like forget all that. Like that's BS. Like, do you really want to do this? Like, is it actually the way you're hardwired? Ask all your friends, people that care the most about you, your family, people who know you well. Like, do they really see that risk tolerance and that drive in you? Can you take any number of assessments that point to you being high risk, high achieving, goal oriented, stubborn, strong headed? Those are all good indicators that you should do this. I meet a fair amount of people that are entrepreneurship curious, and like it's okay to decide not to go down this path. I think your franchise sales team would tell people like, hey, like if you don't have the risk tolerance for this probably isn't for you.
100%. We
just find out. It's not that hard to find out on the front end. Like if you have the hardwiring. If you have the hardwiring, you still got to make a decision, but it's a good double check at the front end to check your hardwiring. I think that's like a thing I'm passionate about telling people is like, it's not hard to have some EQ. It's not hard to be self-aware. Spend some time there. Figure it out.
That's great advice. I didn't even think about that because there is a big interest in this younger generation in terms of starting businesses, and most businesses don't work out. And so if you can find out like, hey, can I do this thing and take a personality assessment or whatever, I think that's a great idea. Awesome. Well, Kelcey, thanks so much for coming on the show. And if people want to find you, where can they learn more? Or if they want to sell you their business, where can they learn more?
Thank you for having me. If you can spell my first name and you know what our website is, you can email me. It's not terribly hard to figure out. My direct messages are open on Twitter, but as we said earlier, it's a bit of a cesspool, so it's hard to get through the spam on there these days. But email me. It's Kelcey at 365. I'm pretty responsive to people writing in. Put Aaron's name in the subject line if you want to get a hold of me, and I'll definitely open it and email you back.
Awesome. Thanks, Kelcey, for coming on.
Thanks for having me.